So you've heard all the buzz about DeFi and its massive growth in the last couple of years, generating millions and millions of dollars in gains. And now you're wondering, what is all that about? And more importantly, how do I get in? Well, don't worry, because today I'm going to explain in the most simple terms what DeFi is and how you can get in to get some of those juicy gains. Hi there, thank you for stopping by. My name is Hector. If you're new around the channel, here we talk about crypto, personal finance, and the Cardano project. So if you're into that kind of stuff, I would suggest you stick around. Also, consider subscribing and hitting that bell notification so you get notified when we push more content out in the tube. So before we start rolling, I want to mention that this video is part of a bigger video series on DeFi where I cover topics from the very basic concepts to more advanced stuff like the best projects to invest and a deeper dive into the different ways that you can leverage your money. So without further ado, let's talk about DeFi. So what's the definition of DeFi? See what I did there? So DeFi stands for decentralized finance. As opposed to the traditional financial system, also known as CeFi, stands for centralized finance, DeFi's premise is to provide its users with the ability to perform the kind of transactions that you would perform in a traditional financial system, but without the need of a middleman or a third trusted party. For instance, if you were to send $100 to a friend in a traditional system, you would open your bank's mobile app and perform a money transfer, right? Well, while this sounds quite normal, what happens behind the scenes when you transfer money like this is that before that monetary value gets to your friend, your transfer request has to go through your bank. The bank verifies that you indeed have the funds to transfer, and then finally, after waiting sometimes days, depending on where that money is going, and then after paying oftentimes very expensive fees to the financial institution, just then the remaining money will be sent to your friend's bank account. Well, if you know about Bitcoin and how it works, you know that Bitcoin is essentially decentralized money, which means that you can use Bitcoin to store and transfer monetary value while removing the need of a central bank or a third party. Using the same example, let's say that you want to send the same $100 worth of value to your friend, but this time using Bitcoin. Assuming that you have a crypto wallet with at least $100 worth of Bitcoin, and your friend also has a crypto wallet, all you need is your friend's wallet's address, and then you can transfer that monetary value to your friend in a matter of minutes, regardless of the location, and a much more affordable cost. Since the network takes the place of the central bank, the transaction goes through a lot faster and at just a fraction of a cost. Now you say,
"Great, Hector, that's a win for crypto, right? Let me put all my money in crypto."
well, hold on a second. Before that, moving monetary value is just one of the functions of a bigger financial system. Before DeFi gets full adoption, there are more functions that DeFi needs to provide. There are a variety of services we use today. For example, loans, saving plans, insurances, and stock markets. All services that are built around money, and together they create the financial system that we use today. Banks, stock markets, insurance companies, and other financial institutions, they're all centralized. All of them have somebody in charge, whether it be a company or somebody who controls and offers the services. This centralized financial system, or CeFi, has the risk of mismanagement, fraud, or corruption, just to name a few. And here is where the full potential of DeFi unlocks. What if we could decentralize the whole financial system in the same way that Bitcoin decentralized money? What if we could borrow and lend money, buy insurances, save and leverage your monetary value in a way that yields interest? This is what DeFi is trying to provide, and right now there are hundreds, if not thousands, of decentralized apps, better known as dApps, being built trying to achieve just that. One essential component of decentralized financing are smart contracts. Now, in the most simple terms, you can say that smart contracts are programmable money. That sounds pretty cool, doesn't it? They are essentially a piece of code that allows all parties involved in a transaction to agree upon terms and have the peace of mind that the other party will hold up their end of the deal. For instance, let's get back to the same example. Just this time, let's say that we're not just trying to send $100 to a random friend, but instead, your friend is a talented photographer and you are buying a photo from his gallery. Now, in our example, you might trust your friend to release the picture and send it your way after you pay him, right? But what would happen if you don't know the seller? What would happen if you are dealing with a complete stranger? Would you trust him? Would you send your Bitcoin before he released the picture? What about him? Would he trust you that you would pay him after releasing the photo? In a traditional financial system, there would be a third party involved, a trusted party, an agent whose job is to make sure that both parties hold up to their end of the deal. Of course, for these services, this third party needs to be compensated, bringing the cost of the whole transaction up. Smart contracts replace this third party. With a piece of code, the software can be programmed to execute the trade and securely handle funds when it's necessary. Both the good and the money are locked up in the smart contracts until the parameters are met. The buyer will receive the photo until he's paid $100, and the artist will receive $100 until he has submitted the photo. All this with the security and the immutability of a programmed code. Pretty cool, isn't it? Hey, before we move on, if you're still here, thank you so much. Stick around because now we're going to talk about how you can make money in this growing industry. But before that, if you're enjoying this content, would you please do me a favor and pump that like button for the YouTube algorithm? It really helps the channel and makes this content go further. Also, consider subscribing and hitting that notification bell so you get notified when I release my next video. Alright, back to it. Now that we know what DeFi is and how it works, how can we make money with it? As we said earlier, there are thousands of dApps being built right now in the DeFi ecosystem. But to build these dApps, we need a decentralized platform. As of today, the vast majority of dApps are being built on the Ethereum platform. This is because it was the first one. Although one thing is for sure, it's not going to be the last one, because other platforms like Polkadot and of course the favorite in this channel Cardano are threatening to take some of that market share. It's also worth mentioning that Binance also has a DeFi platform, with the difference that it's not really decentralized since it operates under the custody of Binance, so we decided to not include that one. Now, if you're wondering why not use Bitcoin to create smart contracts, if Bitcoin is essentially decentralized money, isn't it? And it's digital. Well, this is a great opportunity to clarify something, and that is that not all cryptos are created equal. While Bitcoin is indeed digital decentralized currency, the way it was coded doesn't really allow for great programmable functionality, like it is required to create dApps. There are people working on layer 2 solutions to expand Bitcoin's functionality, but as of today, Bitcoin programmable functionality is quite limited. Now, there is one more concept you need to know before we dive into the DeFi services, and this is stablecoins. I will leave a link in the description below if you want a deeper dive into stablecoins, how they work, how they were created. But for now, all you need to know is that stablecoins are digital cryptocurrencies that are pegged to the value of a real-world asset, usually some major currency like the US dollar. With that out of the way, and now that we have a platform to build dApps, let's explore some of the services that comprise this DeFi ecosystem and how we can benefit from it. Number one, the first use case that we'll discuss is the decentralized exchange, or DEX for sure. DEXs are trading platforms that operate in a decentralized way. They operate according to smart contracts that allow users to buy, sell, or trade cryptocurrencies, just like you would in any other centralized exchange. There are two main ways to generate money in DEXs. The first one is by trading. If you're an experienced trader, then you can profit from the volatility of crypto markets. But if you don't have that experience, or if you're not lucky, or if you just simply prefer a different way to generate earnings, you can also become a liquidity provider. Because DEXs are decentralized, there's not a main entity providing liquidity which is needed to trade in the market. Rather, the liquidity in DEXs is provided by users that are willing to provide their tokens in return of an interest. Commonly, liquidity providers get rewarded in the DEX's native token or coin that they can later burn and turn into stablecoins. For instance, if you decide to become a liquidity provider on Uniswap, one of the biggest DEXs on the Ethereum platform, you will have to provide an equal amount of the trading pair that you want to provide liquidity for. After a period of time, you can withdraw the liquidity you provided and you will get the currencies that you provided in the first place, plus whatever amount you generated in interest in that time period. These rewards are paid in Uni tokens that you can later exchange for ETH or maybe the stable coin of your choice that is available in that exchange. A big advantage of DEXs over their centralized counterparts is that there's no signups, there's no identity verifications, and no withdrawal fees, which makes it a lot more affordable and your personal data is always safe. Let's move on to decentralized money market services. These services connect borrowers with lenders. Compound is an Ethereum-based borrowing and lending dApp. Here, borrowers can access funds in the form of over-collateralized loans, and lenders can loan their tokens to those borrowers. The Compound protocol automatically connects the lenders with the borrowers, enforces the terms of the loans, and distributes the interest. The process of earning interest on your cryptocurrencies has become extremely popular lately, given the rise of yield farming, a term given to the effort of putting your crypto assets to work while seeking to generate the most returns possible. The third financial product that you can invest in DeFi are derivatives. These, just as in the traditional financial system, are comprised by futures, auctions, and synthetic assets. Futures and auctions work exactly like in their real-world counterparts. They're high-risk, high-return kind of investments. The only difference is that here you're paying for the investments in stable coins instead of dollars. Synthetic assets, on the other hand, try to mimic real-world assets like gold, silver, oil, or stocks, only they're denominated in crypto instead of dollars. And finally, insurances. How about decentralized insurances? All these financial products definitely entail some kind of risk. So why not create a service that insures my funds in case something goes south? Well, how about a decentralized platform that connects people who are willing to pay for insurance with people who are willing to insure them for a premium, while everything is happening without the need of an insurance company or any agent or third party?
Fantastic, huh?
These are the basic building blocks that comprise the DeFi ecosystem. But the beauty of DeFi is that you can also combine these building blocks to optimize and maximize your earnings. This is what's called money Legos. For instance, one of the most popular combos is to utilizing a lending protocol, then combine it with a trading protocol to leverage your position, and this is known as margin trading. Of course, there are big risks involved in leveraging money, so please be careful and utilize it responsibly. There is so much more that we could talk about in the DeFi ecosystem, guys, but that will have to be for another video because I am extremely exhausted. I actually shot this video twice and it's midnight in Texas already, so I'm going to bed. But if you made it this far though, thank you. Hopefully it's because you found good value in the content I provided, in which case I will ask you for a simple favor. Please pump that like button to help me grow this channel and help this content reach more people like you. Also, I will be posting a lot more content like this, so if you enjoyed this video, make sure to subscribe to the channel and hit that bell notification. This is it for today, guys. You guys have a blessed one, and I'll see you when I see you.